This week on the podcast, it's gold conversation time. Is there gold in them there hills? Should we be talking about it, looking at it? What should we be doing in our portfolio when it comes to this particular sector? Let's get into it this week here on Phil's Tax Hacks and Other Retirement Facts. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. What's going on, everybody? Welcome into the podcast. Phil, my friend, what's happening?
Doing good.
We got, it's inevitable, right? When we start to have rocky times, gold, go to gold.
Gold to gold. Yep. Gold always comes up.
Always comes up. So we mentioned it on last week's show that we were going to talk about it a little bit this week. With the economy, started and the market's getting a little flustered here and there with all the things happening and the changes. People start to have these conversations. Advisors start to get these emails. Should I go to gold? How do I get into gold? Blah, blah, blah. So
right.
Break it down for us a little bit. What's your thoughts?
Yeah. So, is it the right time to get in gold right now? Right. That's everyone seeing, this big run up in gold over the last year or so. And, naturally you want to, you get that fear of missing out, right? Maybe I should be in gold. Maybe I should be in gold.
Yeah.
To
your point. To your point, my mom's 92-year-old friend says to her the other day, she's like, I know your son talks to financial advisors all the time. She's like, ask him how do I get gold? So there you go.
So everyone's thinking about it, But is it the right time now to invest in gold? And again, it's one of those things. You've got to be careful of jumping into something when you're seeing these all-time highs, right?
Sure, for sure.
So looking at where's it at today, looking at the GLD ETF, so the spot gold ETF.
Okay.
Friday it closed at 270.74.
Okay.
So year to date this year through Friday was up 11.8%. So it's had a pretty good run just in a month and a half, almost 2 months.
Yeah.
Over the last year, it's up 44%.
Right.
So to me, is it the right time now to add it? You got to be careful because we're at an all-time high.
Sure.
Giving some perspective. Over the last 3 years, it's averaged 15.19%.
Okay.
So if we think this through, so that's a 3-year average. So 15, make it simple math, 15 times 3, that's 45.
Mm-hmm.
So 45% over the last 3 years, or rounded up, say 46%, but yet 44% of that 46 happened this year in the last 12 months, right? So
it almost has like crypto feels to it.
Yeah, it has had just a quick spike up.
Yeah.
And why is that? Well, we talked a little bit again on last podcast about, the tariffs. That's coming into play now, the potential of, what is that going to do to the economy? General economic concerns as, is the economy starting to slow, market softening? Earlier last year was, the BRICS and them trying to come off the US dollar and go onto their own currency,
Right.
So just some overall concerns of, is the dollar still stable? Do we need something in the portfolio to help hedge that?
And that's been a growing problem for years.
It has. Yeah. This isn't anything new by any means.
Yeah.
So is it, something you should have in your portfolio potentially, but it's like anything, you don't want too much in there, right? It's a great hedge. In fact, in a couple of our strategies, our inflation and recession hedge strategies, there is gold potentially that comes in or out of the portfolio, as the economies shift and ebb and flow.
Right.
But again, it's not a heavy weight.
Like anything, right? We should,
absolutely.
And no pun intended, by the way.
Yeah.
All right. So dowsides, right? So you talked about a little bit of some of the reasons that you would have it, right? Hedge against inflation, volatility. But what are some of the downsides to it? And it's not like, I guess we should probably break this down a little bit for folks too. It's not like you can buy actual gold, right? Like there's a few extra hoops you got to jump through if you do that, correct?
Well, there is. And this is always the discussion I get into clients when, gold comes up is, should I get some gold?
Right.
And I always ask, well, why? Why do you want it? What's your intention? If it's for a diversifier in a portfolio, then adding the gold ETF is perfect. The GLD, or there's several other ones.
Right.
GLD is probably the most common one, most known out there.
Right. Do an ETF for that. But versus like some people though, I want to buy like a chunk of gold.
Right. I mean, and that's the other discussion, so if you want the diversifier using the ETFs, fine. I mean, if your concern and reason for having gold is, hey, you know what, if this whole economy collapses and,
Right.
we're back into the Great Depression,
Right.
I want something physical in my pocket that I can go get groceries with if I need to. Well, I'm sorry, the spot ETF, even though it is backed by physical gold, you can't trade your ETF for physical gold. You're never going to get it, right?
Yeah.
So you need then that actual physical gold in your possession. And there's many ways to buy that. I mean, you can buy, bullion, just like, little cube, or not cubes, but little,
little, we'll just call them nuggets,
basically, or nuggets of gold. Yeah.
Yeah.
Or you can buy like gold dollars, the US dollar.
Right. The gold coins.
Yeah. Right. You know what I mean? So those are a couple of different ways to own physical gold. But if you do that, I mean, then that brings with it a whole nother set of challenges, because if you're buying physical gold, it's typically trading above the spot ETF or spot gold price.
Okay.
So GLD trades at spot ETF or the spot gold price pretty close.
Okay.
If you're buying the physical gold, well, there's going to be markups and things because it's going through somebody that's buying it from the mint and, then processing it and selling it to you. So there's going to be a markup in that. So you're losing some of the value, so to speak, because of that.
Mm-hmm.
And not only that, now you have physical gold, and what are you going to do with it?
Yeah.
Right. I mean, it's, if you have $10,000 of gold, whatever your number is, I mean, where are you going to store it?
Exactly.
If you're concerned,
and make sure you don't have conversations about it, for sure.
Well, exactly. That's not something you want to bring up at, the bar at night, talking to your buddies and say,
hey, you want to bring it up anywhere. I don't think you want to tell anybody anywhere.
Target on your head that, this guy, I've heard he's got this gold.
Yeah. And if we're talking about downsides, there's those, right? It doesn't generate income, right? It's not, so
it does not generate income. I mean, in fact, anyone it's even held the spot gold ETF, you'll see every single month they're selling just a small piece of it because they're paying the fees. And not, unlike a stock or a bond ETF that has potential of dividend and interest generation where it has revenue to pay the fees, there is nothing.
Okay. Gold
doesn't generate revenue to pay fees. So they're selling some of those shares each month to pay the fees.
Right.
And it can be volatile. I mean, it is a great diversifier, but it's not a stable asset. Let's put it that way.
Yeah.
So give some comparison, a standard deviation, and that's just a measure of, if we had kind of that average return, how big the swings above and below that average are. Standard deviation averaged almost 17% since inception.
Okay. Wow.
Max drawdown. So from a high to a low, how far did it fall at one point? Almost 46%. Okay. So compare that to SPY, the S&P 500.
Mm-hmm.
So its standard deviation is at 16. So it has the little higher standard deviation than the S&P. Max drawdown in the S&P has been 55 back in 2008. So I mean, it's a very volatile type asset.
Yeah.
So just like owning the S&P, I mean, if you're not comfortable with these big swings, just be careful how much of it you own in the portfolio, especially if you're buying it where we're at today.
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. You will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of the Tax Smart Retiree right now.
Yeah, because we're kind of in this little gold rush lump, right? I mean, because typically, like over 10 or 20 years, it didn't really do anything. It was pretty flat for the ever, right? So, and I guess that begs the question for people, do you go paper, right? Paper gold or physical gold, right? I think that's the big takeaway when you bring up this conversation or someone brings it up to you, again, like the little 92-year-old lady. And I was like, well, what is she looking for? And she's like, she wants actual gold. I'm like, she's 92. What is she going to do with actual gold? You know? Yeah. She's not going down to the corner store and shaving off a little chunk to get anything, Well,
and that's the other challenge. If you own physical gold, if you have the gold dollar, I mean, what are you going to do? To your point, shave off a little bit of that down at the grocery store. I mean, you have to buy it in.
I'll give you a sliver for some bread.
That are tradable.
Yeah.
Same thing. I mean, if you're buying a gold bar, I mean, what are you going to do with that?
Yeah. Yeah.
So, I mean, you have to really give some thought as to why you want to have gold.
Sure.
Gold as a diversifier in a portfolio absolutely makes sense.
Okay.
A little bit goes a long way. I mean, I look at it more like insurance and a hedge.
Okay.
So have a smaller percentage in your portfolio, and that's where the gold ETF does a great job with that, because it's an easy liquidity. You can buy and sell, get in and out. There's no storage. You don't have all those concerns with it.
Right. Like anything, right? No big percentages, right? Don't have 20% of your portfolio in any one thing.
No. I would say probably for most people less than 5%.
Okay.
Depending again on your concern and how much you want to hedge.
Yeah.
But if we do get into something dramatic, like a great depression again type of time frame, I mean, hope that never happens, but you don't know.
Right.
But I mean, if something like that happens, a small amount goes a long way.
Yeah.
Same
with other precious metals.
Yes, other precious metals. Gold is kind of it's like Bitcoin in the crypto world, right? Gold is the granddaddy. Everyone knows. Right. Everyone wants gold.
Is Ethereum silver? I don't know. Yeah.
Yeah, exactly. Ethereum's kind of silver. So silver is another great precious metal to own. Pros and cons. I mean, to me, the silver is a good precious metal to own for a couple of reasons. In that it can be the same inflation volatility hedge, but it goes beyond just that as its sole purpose, because there are a lot of industries that use silver.
Yeah, true.
In the electronics industry. So there are some industrial uses of silver. Gold, there's no other than jewelry. I mean,
it's really, if you do some deep dive on gold, it's really an interesting resource that we went with, way back when, as like the be all end all. Yeah.
Yeah. I mean, dentists don't even use it to make teeth anymore, right?
No, no, I got one. Maybe, wait, no, I don't. Never mind. I didn't say that.
You got to be careful.
Yeah, no, it is really interesting. If you do a little history on that, right? It doesn't, like, its melting point and like all these different things that other precious metals are really good for. It does nada.
It does not. Yeah. So why gold? Why did it ever?
Don't know.
Who knows? Yeah.
Because it's shiny. Because it's pretty.
It's pretty. Yeah. Versus silver, just kind of plain. But
gold doubloons and all those really cool coins from way back when. Maybe, I don't know. Yeah. And it's so shiny. So, all right, final takeaways, my friend.
Yeah. So again, just be careful, like anything, right? I mean, usually if you hear it in the news and, the gold rush is happening, it's too late. I mean, if you're buying it because you're wanting to jump on the bandwagon, be very, very careful at this point, because we've had a huge run up this year. Like I mentioned, 44%.
Well, yeah, right? You could do that with NVIDIA tech stocks. You could do that with crypto. It's like, oh my God, it's going through the roof and it's already at the roof. Let me get in now. Well, you're getting in at the worst time.
FOMO. If you're missing out, right? I got to get in before, it's going to go through the roof. It's going to go to, 2000, whatever it is. I mean, come on, hold on, have it as a hedge in the portfolio. Absolutely makes sense. Yeah. Is now the right time? I'd be really careful. Maybe start out really small, and kind of take it from there. Over a long term, I think it does make sense to have some gold in the portfolio as a hedge. Okay. More of an insurance. So,
all right. Well, if you got questions, folks, need some help on an analysis of your situation to see, do you need to change some diversification? Do you need to add this or that or the other, whatever that might be, not just today's topic, then please make sure you're reaching out to qualified professionals like Phil. He's been helping families for many, many years get to and through their retirement journey, their financial journey. He is a CPA and a personal financial specialist, and you can find the links in the show descriptions below. So make sure you subscribe to us on Apple, Spotify, and of course YouTube, and go check him out online at philstaxhacks.com. That's philstaxhacks.com. We'll see you next time here on the podcast. Thanks for hanging out and breaking it down as always, my friend. Have yourself a great week. We'll catch you later.
Phil? Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.